Good morning, investors and traders. In today's segment, we'll be focusing on Nasdaq 100 index, which has fallen into a bear market territory for the first time since 2020. Now, the question for traders is this a buy opportunity or if there is more pain ahead for the index? That is what we'll be exploring in this particular segment. Before we do that, as always, it is important for me to go through this brief risk disclaimer and risk warnings which are in front of you. If you have any questions in relation to that, please feel free to get in touch with your own account managers. Now, let me bring up the MT4 platform. So the chart which is in front of you is the MT4 platform's chart for Nasdaq 100. Before we do that, a bit about myself. I come with a wealth of 15 years of trading experience. During this time period, I worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst for EverTrade. Now, what do we know from the chart which is in front of us? Well, first of all, something which really kind of jumps out on the 4-hour time frame for us is a pattern, a bullish pattern which has formed, and that is your double bottom, first bottom being over here, the second one being just right over here. Now usually what happens is that when the price forms a double bottom like the way that it has over here, follow on what we see is a price moving to the upside. But something that we have to keep in mind at the same time also is that currently the price is trading below is 50-day simple moving average, 100 simple moving average, and of course the 200 simple moving averages. Now all of that is a confirmation that currently this particular trend is very much controlled by the bears, because if the price cannot break above this particular line or this particular moving average, we are likely to see a move to the downside rather than a move to the upside. That is something that we have to keep a very much close eye on the 4-hour time frame, because if the 4-hour time frame begins to show improvement, which it should do before anything else, then we should see this double bottom. If this is going to come into play, if this is really going to work, then we should really see the prices moving above these moving averages. If they don't, then we are likely to break to the downside. That means the current bear market territory, the current bearish trend is very much likely to continue its momentum to the downside. Now, the other aspect for us to look at it even more closer to that is on the 30-minute time frame. What do we see on the 30-minute time frame? On the 30-minute time frame, we see exactly or pretty much the same sort of a scenario playing over here as well. Now, what is that scenario? That scenario is that double bottom forming over here. Now, obviously, the second bottom formed over here, the first bottom formed over here. Now, again, what we are waiting for here really is for the price to see if it can break above that 50-day simple moving average, the 50 on the 30-minute time frame. Because if it can break above that, if we see the break, then that would be a confirmation that the downward trend is very much over. Now the prices are more likely to move to the upside, and then the moment that we will see the price breaking above the 50, it is going to break above this downward trend as well, and then we will see a big kind of a momentum to the upside. If it doesn't, then we are likely to break to the downside. Now, on the daily time frame, what we really see in terms of the price action is, first of all, that the price is trading strongly below this downward trend line. There's no doubt about that. And secondly, what we also see at the same time is the bearish trend is about to take a little bit more intense momentum. It is about to pick up more momentum. Why? Because the 100-day simple moving average has crossed below the 200-day simple moving average, which means that this trend has a bit more room to go, and that means this particular trend is going to continue further to the downside. Now, where can we expect this particular trend to continue? Where is the next important support zone? Now, in order to see that, obviously this is the area that we are all focused on, and this is this was a COVID low. But we are hoping that the prices aren't going to go to that far. But the areas that we are very much focused on in the meantime is, of course, the lows of these particular candles, which are very much in line with the previous resistance over here. And then after that is this particular low, which was retested by the price over here. So these are the sort of support zones that we are very much focused on. So let's completely mark them on our chart. So first of all, because these are our support zones, so we're going to change the color to green to make sure that whenever we look at the chart, we know which one is our support and which one is our resistance. So let's mark these zones. So this is your zone number 1, and this over here is your zone number 2. And after that, what we are really looking at, if the price are going to continue the momentum to the downside, then we're looking at zone number 3, which is right over here. Now, as for resistance, if you guys are wondering, they're going to be sitting on top of this particular candle, and then of course over here. These are the minimum price targets that I wanted to figure out. Something else I want you guys to pay attention to is the divergence. The divergence is that the price is making lower lows, while the RSI over here is actually showing lower highs, meaning there is not enough momentum behind the current price lows. In other words, we are likely to see a momentum to the upside, and again, the signs of those ones going to be coming from the 4-hour and 30-minute time frames. That's all for now, folks. Remember to smash that like button and make sure you are subscribed to get all the daily news from us. That's all for now. See you next time.